So we have three panelists this afternoon. Ian Duthie, we'll get each one of you to introduce yourselves in just a moment, but his background is up here. Ian was with the North of England P&I Club. They started about 160 years ago. I don't think Ian was there at the beginning, but we're not quite sure about that. Paul Barnes with the West of England. They are a relative newcomer to the P&I. They've only been around 150 years in there. And Hannah is, of course, the most useful one of the group in many ways, but particularly because the Standard Club was formed in 1884. So the most recent formation, but still nearly 120 years before that. So let's get them to introduce themselves first. Hannah, would you like to start us?
Yeah. Hi, I'm Hannah Morris. I joined Standard Club in January 2007. Prior to that, I'd been at Marsh broking P&I business, predominantly with the US, so a similar market to I handle now. I'm based in the UK, but in a normal year would be frequently travelling to the US.
Thank you, Hannah. Whoops, don't need mine. Let's go Paul next.
Good morning, I'm Paul Barnes. I have the New York office. As Ian mentioned, we're celebrating our 150th anniversary this year. Unfortunately, we didn't get out to squeeze everybody. I'm celebrating that way, but celebrating we'll do it. I've got 35 years in my 35 in marine P&I claims, P&I underwriting, broking, and working in Lloyd's syndicates. So in addition to marketing and business development for West, I also work closely with the underwriting department in London to provide service to our members and, of course, the broking community here in the US and indeed North America.
Paul, we are getting a little difficult on the audio from you, so if you could speak up as you come through, that'll be great. Thank you. And the other Ian on the call today.
Hello, everyone. My name is Ian Duthie. I am with the North of England. I am a director located in New York. I've been with North for about 2 years. Substantially, my career started 30 years ago. I was a Navy surface warfare officer who then did some time in the Coast Guard Reserve. I've been on both the insurance side and the ship owning side, having been head of one of the other P&I clubs, North American marketing team, and then worked for about 10 years with a Jones Act, predominantly Jones Act NYSE listed shipping company. We operated about 50 ships, car carriers, bulk carriers, multi-purpose government ships. Spent a short amount of time also with a broker with Marsh, and as I say, now with North in New York.
Thank you, Anne. Appreciate it. And just for the group as a whole, I just want to start by saying thank you very much for taking the time. I know it's a busy season starting to run up to February 20th, so we really appreciate your time, taking the time. So Hannah, we're going to start off with you with a question. P&I clubs have their origins in the 19th century, all three of you date back that far. How are they relevant to the US vessel owner today?
Okay. Well, if we sort of think back to the state of the shipping market and the type of ships that were sailing when the clubs were established in the latter part of the 19th century, and a lot of them were still sail, and then we were moving into coal-fueled and steam. Now we've moved on to heavy fuel oil, looking at LNG-powered ships, low sulfur in last year, and then even autonomous shipping. So the original purposes of the clubs were to look at and to cover all those liabilities that were anticipated in the normal course of trading, with a ship carrying passengers and or cargo from A to B. So this element is still very relevant for the US, obviously, whether it's domestic trade or international trade. And actually, throughout all these changes that have happened in the shipping world, and more liabilities being brought in on ship owners, OPA being a prime example, the clubs have evolved to meet all these liabilities, covering in a similar way to they were when they were first established, with their mutual members who share those same risks. And the group's ability to pool claims across the group, it's a phenomenal limit. Theoretical limit, I think we're just over 8 billion by the time you take in reinsurance and then overspill. And you've just got to look at the examples of claims in US waters. You look at the Costco Sam back in 2009, the Golden Ray more recently, the car carrier off Georgia. And actually even sort of examples, we have the El Faro, there was actually a US owned company, there was Bouchard tank explosion. And then obviously we've got the Concordia with a US nexus because of the ownership of the overall company. But these are just examples of actually how the expertise of the club, clubs all respond to these huge casualties with the expertise and the networks all over the world. We've got a number of US members who trade up to Canada and have actually, since joining the IG system, have been grateful for the network of correspondence up there with sort of vetted lawyers at hand and our club office there, along with the loss prevention team that actually those that may decide they're going to trade outside of domestic waters and need a little bit more input on various different regulations. But I think probably the biggest thing is the capacity of the group. Huge stretch the group has to secure A-rated security with a reinsurance structure behind the pooling system. And actually, whereas you look at it as a group and you can smooth out those peaks and troughs, whereas an individual ship owner with a fleet of, say, 20 ships, you have a large loss and it's quite difficult to secure that capacity, especially at a sensible price and the subsequent renewal. And then just finally, we've got to remember that the group is made up of ship owners. They're owned, the mutuals are owned by ship owners with ship owners on the board. So it's always responded to the needs of its members. COVID being the prime example, at the moment there is no exclusion, there's no plan to be, and reinsurance exclusions wouldn't even come in to excess of 100 million anyway because of the pooling system. So yes, I think it's very relevant and it has a huge amount to offer to the US market.
You mentioned in there the IG, the international group. Can you explain a little bit more about what that is and how the agreement basically works simplistically between the different members?
Yeah, of course. So the IG is the international group, which is made up of 13 mutual insurers referred to as clubs. They're all not-for-profit organisations, I mentioned before as the mutuals, and estimated about 90% of the world's ocean-going tonnage is insured within the IG. Has a huge claims handling experience within the group. Actually, strapline the group is collectively stronger. But just to sort of touch on the point previously I made on capacity, the limits that the group secures are definitely, well, nobody can beat those limits. And there's three prime documents that sort of underlie the international group and the foundations of it. There's the IG Constitution, which just looks at the operation of the sharing and pooling. And then we have the pooling agreement, which is actually a document that sets out, a bit more dynamic than the Constitution, of actually what can be pooled, those risks that are excluded, which are included, and then how the pooling, the claims are shared between the pooling partners on an equitable basis. And then the third one is the International Group Agreement, often referred to just as the IGA. I'm actually researching this, I hadn't quite realised that it was established back in 1929, and initially the reason for it was that the clubs were quoting business for US flag business, and obviously with the insect exposure that comes with it. The agreement was just put in place to make sure one club didn't undercut another. And basically, the agreement, it regulates how, if the ship owners want to move from one club to another, how that's done, how clubs may quote rates and the information they need to be able to move from one to the next. It looks at release calls, and it also looks at sanctions. So if actually a club did breach what's in the IGA and did undercut a price, the sanction for it on the poolable tonnage side is that actually there'd be a reduced pooling facility. But I think the whole ethos of the group is mutual trust and cooperation between the members. And this is the way it continues and it thrives, because we need to make sure there's enough money within the group that rates aren't chased down so low that actually, in the case that you do have another Concordia or a huge claim, that actually there's still enough money to pay for those enormous claims. Yeah, so the IGA is really what is enshrined in the group, the principles behind it.
Thank you, Hannah. Ian, anything you'd like to add to either of those first two questions?
No, not so much. I mean, the IGA has stood up the test of time, which is, and to Hannah's point, it's really about capacity that's affordable. You know, I think we will talk a little bit later, maybe about renewal, but the fact of the matter is that the clubs have worked cooperatively together for a long time. There's a reason for that. The other reason to maybe consider an IG club is that each club has a depth of experience in claims handling, and maybe that's the kind of that's the kind of experience that you don't necessarily come across in the commercial underwriting space or the commercial space in the U.S. There's a lot of infrastructure in terms of what clubs can offer their clients and members.
Actually, I remember somebody defining a club to me as somebody who's a claims organisation that happens to provide some coverage as well. But yeah, there's definitely a combination in there. Paul,
well, if you're a ship owner, if you're a ship owner, that's meaningful.
Paul, how about you? Anything you'd like to add to those two?
Yeah, I mean, it sounds rather like it's all a bit of a cartel, and we're out to squeeze every last dollar out of the membership. In actual fact, the international group agreement and the system works to prevent one ship owner having a terrible record with one club and then running and dumping that record with that particular club. Now, for the club involved, of course, that has the bad record off. But in actual fact, because all claims in excess of $10 million retained by the club, that it's the holding club, the members club, or shared by the other 12 P&I clubs, what in effect you're doing with a very bad record is collecting from the whole group and then dumping one club with a bad record, and that's the system. In terms of the cartel type nature of it, we are as a group heavily regulated, and we do have to from time to time go through a thorough audit, particularly by the European Union.
Yeah, that brings us on to our next question, Paul. You know, the structure and solvency requirements, obviously, too, that's required of the IG clubs today. How has that changed the potential for unplanned supplementary calls?
Yeah, previously clubs were regulated by their home state, and there was limited oversight as to how they invested their funds, how they underwrote, and on a fairly regular, somewhat cyclical basis, we tended to see unbudgeted supplementary calls, and this continued until the sort of mid-2000s. In 2009, the European Union, which oversees the vast majority of the international group clubs, introduced what's referred to as the Solvency II directive. This deals with the business of insurance and reinsurance and sets requirements on a number of factors for the insurers, but in particular, governance, public disclosure, solvency requirements, and capital requirements. So basically, this EU directive ensures that all of the clubs which are subject to the EU directive are well capitalized, and the 3 clubs on this panel are all subject to that. In addition, all of the clubs are rated predominantly by S&P. Historically, we've had AM Best, which I think many of the people on the call will be more used to. But AM Best is not one of the big 3 rating agencies, and because of our Blue Water membership, who have counterparties that are typically governments or very large trading houses, institutions, banks, and so on, S&P is far more widely rated. Now, S&P, A rating, or as close to it as you can get, investment quality, is an expectation not just of brokers, but many of each of the club's members or their counterparties, their mortgagors and so on. So everybody aims for an A rating from S&P. Now, to get the A rating, so let me just take a step back. S&P will only give a monoline insurer, which essentially all of the clubs are, nothing higher than a single A rating. They won't give AA or AAA. But in order to get that A rating, S&P expects the club to have AAA rating equivalence on its capital adequacy model. So basically, that forces all of the clubs, much as the Solvency II directive does, to remain very well capitalized. It penalizes aggressive investment strategy, so all of the clubs will have a very, or a reasonably to very conservative investment strategy. If you add these, the capitalization level together with the conservative investment strategy, I think it's fair to say, you never say never, but I think it's fair to say that the vast majority of clubs are highly, highly unlikely to have an unbudgeted supplementary core. That's not to say that they don't all need to be very careful with their underwriting performance, and we'll come to that with the upcoming renewal. But I think the likelihood, with one or two possible exceptions, is extremely small.
Thank you, Paul. Hannah, anything you'd like to add to that?
Yeah, I think Rebecca and you said, but I think also it's improved the structure around it and the disciplines. And I think that actually the governance and risk management of clubs is also far better now because of Solvency II. And that's not to say the clubs also have the ability to make supplementary calls, and if they were in the position they needed to, they would. But we do the solvency assessment, our own risks, actually makes us just look far more carefully and plan scenarios. And I think it is a far better, the regime, the internal governance is far better than it was in the past.
Thank you, Hannah. Ian, what about you? Anything you want to add to that?
I agree completely. I mean, it reminds me really, in a way, it's a lot like Dodd-Frank was for the banking industry. And, you know, the effort was to give people more transparency, to make sure companies were more focused on enterprise risk management. And that's, you know, that coupled with capital adequacy, that's just what's happened in respect to the clubs. And you can see it's reflected in the way S&P reports on the clubs routinely.
Thank you, Ian. Just following on with you, you know, the headlines every day today are COVID growth. How do you see that's affected the clubs this year, both from the cruise industry's perspective and obviously general cargo?
Well, COVID's had a significant impact on shipping, and as a result, on the clubs. You know, the clubs provide liability cover for death, injury, and illness to seafarers. The disparate international response to COVID created a multitude of issues for shipping companies, including the restricted movement of crews to and from vessels, which impacted ship operations, which impacted the clubs. As the disease spreads, some of the problems were foreseeable and some weren't. You know, the early news involved cruise shipping, but then COVID and its effects spread to the larger shipping industry. The clubs have had to dedicate substantial resources to help ship owners and operators respond. Fortunately, the clubs have experience managing these kind of complex liability events, and that's allowed us as a group to adapt quickly. Crew-related issues are handled by claims handlers who have expertise dealing with personal injury and illness matters. But COVID created wide-ranging operational, contractual, and practical issues, which in turn required feedback from all departments within the clubs, including loss prevention, legal, IT. Effectively, a holistic, coordinated club response was necessary. So a tremendous amount of resources has gone to this. And keep in mind that you know, the clubs were like any other organization, typically together in one place, and all this acclimation had to happen on the move in the first couple of weeks that the clubs went remote. But it's been quite a transition, particularly for the personal injury department. I mean, if you think about the effects of comprehensive border restrictions and that impact it's had on the crew, but all other illness and injuries that required medical treatment during this COVID issue, even urgent medical treatment, were much harder to manage and also expensive to deal with. And the clubs couldn't easily arrange for injured crew to be taken ashore, much less hospitalized. And when arrangements could be made, repatriation home was more difficult, longer, expensive due to lack of airline flights. With COVID, clubs were suddenly faced with having to communicate with consulates, unions, charities, flag states. This led to more vessel diversions, more medevacs, longer periods in port, all time consuming and expensive. So in effect, it's been, like every other industry, we've had to learn on the go. And I think one of the lasting effects, and we hope this isn't the case, but one of the lasting effects of COVID, frankly, is as a result of the widely publicized lack of crew changes, there's been real concern about the health of the crew on board, safety of the ships, yeah, I mean, the probably predominantly really safety and the potential effects of that, and we're still driving through those issues now. Certainly, the clubs are answering issues on the personal injury front, but also all kinds of contractual issues have arisen as a result of COVID as well. Fortunately, to your point on the cruise shipping, fortunately, the cruise claims seem to have been more at the beginning of the COVID crisis. These ships that we saw in the news, these Princess ships, it remains to be seen how many large claims we'll see from the cruise segment. But I think it's pretty subdued right now, fortunately.
Thank you, Ian. Paul, some of the clubs like your own have established beachheads here in the United States. What's the purpose of those?
Well, just looking at the statistics, obviously American Club are domiciled here in New York, but of the other 12 international group clubs, 7 now, in actual fact, have offices in and around the New York City area. They basically perform 3 main roles. One is to provide claim service, which Ian talked about earlier, to the North American, the US members for each of those clubs. They also provide general advice, not just on the claim side, but safety, loss prevention, legal advice, legal updates, and that sort of thing. So they provide that to the local membership. But they also provide similar claims services to the entire club's membership, domiciled elsewhere in the world that happen to be trading to the US, and we'll run into issues here. The third role is a general sort of marketing, governmental liaison, keeping up with legal precedents and so on, making sure, Hannah touched on it earlier, that your correspondence are all tip-top and up to date. So they're the 3 main roles of the officers. So how each club sets up its own office will depend on how much of its membership is domiciled in the States. It will also depend on how much of their membership is blue water operators versus brown water, i.e. non-Jones Act fleets versus Jones Act fleets, because you tend to staff the offices slightly differently depending on which type of member you're dealing with. So why, I guess the question is, what's the purpose? Why do they do this? Well, you look at the way the clubs have looked at it. The offices are generally staffed by legally qualified personnel. They're all in and around the New York City area. And it's really a commitment to the US, the Americas market, whether it's just North America or indeed including South America. And the idea is to provide this service proposition that all the clubs offer, which differentiates the clubs from the domestic market. It's truly 24/7 claim service. And it also factors a global trend on the part of the international group clubs to regionalization. So you want to provide that 24/7 claim service, not just provided by an office which is closer in terms of time zone, but also actually which lives in that jurisdiction. So whether it's in the States or elsewhere in the world, you've got people who actually live here, they understand the legal system, they're constantly in touch with lawyers or the flag state, local class, and so on, so that there is a true local market presence. And I think, when you look at the clubs over the years, the offices started fairly small and have slowly grown. I think as an international group body of experts, the group now with these 8 officers has a critical mass of expertise for the American market, and I think we will continue to see this strengthening of the international group presence in the US. It happens to be focused in New York at the moment, but that I think is a factor not just of geography and ease of travel, but it's where you bring the brain pool together of experts in international group business.
Thank you, Paul. I appreciate that. I'm going to ask this next question of all 3 of you, but I'm going to ask Ian to lead it off. What are the major challenges you see coming up for the clubs for the February 21 renewal?
Well, one of the well-recognized challenges the last 2 years has been the increased number and value of large claims, what the IG clubs call pool claims. These claims are valued in excess of 10 million, where liability is shared proportionately by all the clubs and its reinsurers, as Paul touched on a little bit earlier. The international group have reported 10 pool claims in the first half of this year, which is the highest number in at least 25 years. This, combined with the premium squeeze really brought about by unsustainable premium erosion the last several years, is placing pressure on P&I rating. Generally speaking, the clubs have benefited from strong investment returns the last several years, which have helped offset premium erosion. This issue is being widely reported on, and it's been the subject of commentary by the rating agency S&P. Standard & Poor's is covering most of the P&I clubs. They provide credit ratings on the clubs, so this is news that you'll see frequently, particularly around time of renewal. They've been quite direct on this reporting as recently as last October. I mean, I could quote what they have to say, but maybe if we want to share this couple of minutes, I'd be happy to let one of my colleagues continue.
Thank you, Ian. Hannah, what about you? Where do you see your challenges coming up for February 20th?
Very similar, actually, and it is, as Ian said, it's a group problem. Rates across the group have gone down reduced by about 20% over the last 5 years, and as well as seeing pool claims, everyone's seen a marked increase. Well, we in particular, and I don't think we're not alone, of large claims. Sort of Standard Club abates above 3 million. A lot of clubs are a similar level of actually claims between, say, 3 and 10 million. And no particular trends. They're random large claims. Generally, attritional claims that have gone down a lot in the past few years. So yeah, it really is a challenge to try and balance when you've got rates going this way and claims going the other way. And then COVID, I suppose, is the other thing on just how everyone's addressing it. Everyone will no doubt end up with a exclusion in their non-pool reinsurance, and how best to address that for our members with extended covers and charterers liability insurance.
Paul, anything you'd like to add to that?
Yeah, I mean, I broadly echo what Ian and Hannah were saying. In spite of the presence of the international group agreement, which appears to prevent or significantly limit competition, the fact of the matter is the clubs compete aggressively on all manner of things. The reference to the premium change of 20%, that's 20% down across the group in the last 5 years, while tonnage at the same time has gone up by about the same amount. So the overall effect is more like 40% reduction. And this is because the clubs do find ways to compete. That cannot go on. It's unsustainable. You can rely to a certain extent on investment income, but there's certainly no guarantee there. I touched on earlier, the investment strategy tends to be very conservative. So I think it's incumbent on the clubs to try their best to get the underlying underwriting performance right. And then if there is investment income, they can decide what to do with that, whether it's further investment. The core issue is to get this eroded underwriting performance corrected in the coming years.
Thank you, Paul. Appreciate that. Before I ask the last question, I just want to remind participants to type any questions into your question box. I'll try and get to them. We are running a little short on time, but I'll try and get to any questions. So please go ahead and complete those in your question box on the screen. So Hannah, we'll lead off with you on this one. We're going to ask everybody, gaze into your crystal ball a little. tell us what you see on the horizon for clubs over the next 2-3 years.
Well, the obvious one is the dear old subject of consolidation, which is always discussed, and it may well be actually with everyone with similar pressures. Some of the smaller clubs may struggle more than others. Consolidation may be on the horizon. It may be that we're not 13 clubs in 2 or 3 years' time. But actually more of an issue is there's a greater focus on sustainability. And by an issue, I think it's a very positive thing. Capital providers, reinsurers, regulators are all looking to sort of support sustainable initiatives. And the clubs are becoming very aware of this, and sort of with a focus on the blue economy, with sort of green ship recycling being sort of the most basic part of it. And flag and class society is becoming very interested too. So I think over the next few years, that will be a greater subject of discussion, and something really as a priority for a lot of the clubs.
Paul, what do you got on your crystal ball?
Yeah, I mean, certainly echo what Hannah said in terms of potential consolidation. I think one of the issues which the clubs have dealt with recently over the past number of years, and I think will continue to do, is where additional liabilities being imposed on ship owners. And the shipping community, and indeed supported by their brokers, are seeing the clubs as a natural home to simply dump more and more liability coverages. Whether this is by regulation and the Maritime Labour Convention, for example, with regard to crew, is a good recent example. But I think we will see more of that going forward. There is no exclusion in the the international group cover in respect of pandemics. And whether that will continue remains to be seen. I certainly expect that it will, but part of that calculation is what the reinsurance market makes of the risk of pandemics going forward, not just COVID-19, and whether the clubs can continue to purchase reinsurance for pandemics, and if they can't, whether they're prepared to share the risk of those pandemics amongst the group itself, and if so, to what level.
Thank you, Paul. Ian?
Those are two very good points. I would echo what Hannah and Paul both said. What we're seeing is what you see from the commercial market, and I think maybe they will both agree with me, is this COVID exclusion, which has then become a communicable disease exclusion, was very reactionary, and in a way is a reflection of the for-profit commercial market. The clubs are there to support their ship owner operator members, and as Paul said, there's as long as the reinsurers stand by the current portfolio, we should be able to continue to provide this kind of support to members, and that's what we're here to do. It's predictable, reliable support, and really the clubs acting as an adjunct of their ship owner operator members, and all the support and infrastructure that comes along with that.
Thank you, Ian. I appreciate that. You clearly have all three done a fantastic job, because nobody's got any questions. So you've either completely bamboozled them, or you've explained it somewhat we don't have any questions. So it leaves it to me to again thank each one of you for taking the time out of your busy schedules to spend with us and the group today. And I hope you all have a great renewal season.
Thank
Thank
you
you very much. Thanks, Ian.
Thank you.
Come back
Cheers.
to webinars back in January. Happy holidays, everybody.
To you too.
Thank you.